Hello, everyone. Welcome to the launch of our new podcast series, MF Insights, where we bring you exclusive trends, deep dives, and data driven insights from the heart of the mutual fund industry. I'm your host, Neha Sanjeev. Today, for our very first episode, we are decoding Going Beyond the Box report on women investors. Joining us to share his perspective today is Mr. Anuj Kumar, Managing Director, CAMS. Welcome, Anuj.
Hi, Neha.
So, we'll start with our first set of questions. CAMS is widely recognized as the data custodian of the Indian mutual fund ecosystem, managing nearly 68% of the entire industry's assets. Today, we are discussing the fifth edition of our report, Going Beyond the Box, Report on Women Investors. 5 years ago, when CAMS first decided to initiate this specific deep dive study into women investors, what was the genesis behind it, and how was this thesis has evolved so far?
So over the last 10 years, I think there's been a quiet revolution in the making. Some of it has been noticed, some of it has been unnoticed. And when we look at the data, it seems that there are things playing out at the societal level, geography level, income class level, where the trends are not exactly noticed by everyone, but they're very prominent. And we need to highlight them so that industry stakeholders can take the right decisions in terms of going after the right segments. There were three trends we identified. One was the participation of women investors, because data was telling the story. And I will talk a little more about what story the data told, about millennial investors, and about the contribution of B30 towns. So I think the genesis was the trends that the data was showing. We could isolate investor behavior, and we thought these were a few trends worth highlighting. Women investors' behavior was the most prominent one amongst these three.
What are the two insights that stood out for you from the report?
When I said there was a quiet revolution in the making, just think about it. Women used to be a tax number in the family, they were pan in the family. You move some money to them or gifted that money to them to start investments, and you achieve some degree of efficiency in your portfolio. Would they become 37%, more than one third of the individual assets of Indian mutual fund holders? That's like a holding your breath moment for everyone. So I think that's clearly one insight which you cannot stop taking notice of. The other is, while it has taken women the last maybe 5 to 10 years to unleash themselves completely as an investor class, almost 45% are now coming from B30 towns. What are these B30 towns? It's not Mumbai, Pune or Delhi. It's Cochin, Trivandrum, Jalandhar and Jamnagar, and many more of those, but I'm just giving you 4 sample names. These women may have been born and raised in those towns. They have moved to Bangalore, or they could have moved to Bangalore or Delhi later for employment. But 45% of new women investors are coming from those towns. And I think that's revealing just in terms of how the socio-economic trends, family trends in the country are playing out, how employment is kind of becoming a big equalizer. I would say those two strike out the most. There are several others.
Of total women investors, 45% are coming from B30, like you were already referring to. According to you, what are the main drivers for the same?
I would say the biggest driver perhaps is symmetry in trends in education across the country. Great schools and institutes don't just happen in large cities, they're happening across the country. When women participate in education, and employment-oriented education, they could become lawyers, accountants, engineers, doctors. They're coming from just everywhere. And like I said, they're not just a PAN number in the family. They're independently part of a payroll process in a large company, or they're a partner in a firm, or they have an independent clinic or have a medical practice. And all of that allows them the luxury of having their personal money which belongs to them. They may or may not want to consult someone else in the family or in the cohort list. They make their independent decisions, they decide to splurge or to save. When they save, they invest, and they select the asset class. It's a very complex social process, but I think it's working out like that. That, it seems to me, is the real story.
Looking at the data points from the report, what is your suggestion to a mutual fund distributor for this segment?
It's interesting you asked me this, Neha, because I made this point at a recent conference where I had a large number of distributors and advisors sitting, and I asked them to raise their hands as to how many of them actually approach and solicit women because they believe the woman has like disposable income and money and a propensity to invest. Not too many raise their hands. I think our propensity to solicit business or styles are of a certain kind. My advice to them is that if women have 37% of assets, if they're coming, a lot of them are coming from small towns, 58 or 60% of them are using advisors or intermediaries like yourselves, it should be our job to solicit business from them. It's just a natural sequel. Well, my guess is, I don't have data, but I have a hunch that it is not happening as much as it should, and that's my advice to them, to go actively seek and solicit women investors for growth in their business.
As the role of women in the financial decision making in the households is increasing, how do you see that having an impact on their contribution towards mutual fund industry?
I think I don't even need to predict. We don't need to look at the crystal ball. The trends are clear. The trends are going to sustain themselves. Will this 37% become 38 or 39? Obviously, it will over a period of time. Will the underlying assumption that women first buy gold and then they believe in risk-free asset classes and therefore they are not natural equity investors? I think all of that is being demonstrated is a myth. They are opting for all of these things. They are opting for balanced portfolios, multi-asset classes, equity as an asset class, and they're doing it with some momentum. So I think all of that will continue. It will break the myths that they are looking for risk-free investments. Their first preference is gold, and they're perhaps debt investors. And I guess if just this trend continues, we do not need 100 layers of innovation on top of this. If just this trend continues, it's just good news for the mutual fund industry.
Super. So that's a wrap for today's episode. Thank you, Anuj, for sharing such valuable insights on women investors in India. Stay tuned for more such valuable MF insights.